to this year-end edition of Startup Street. As 2024 wraps up, India's startup landscape is at a pivotal moment, with transformative shifts in AI, deep tech, fintech, edutech and fintech. This year has been one of resilience, evolution and opportunity. I am Shruti Mishra, and with me as always are Arundhati Ramanan and Ritu Singh. Let's dive into the big stories that shaped the year. 2024 was truly the year of startup IPOs, with 12 companies going public and raising billions. India's startup ecosystem has truly arrived, led by landmark listings like Swiggy's $1.35 billion IPO.
Absolutely, Shruti, and venture capitalists reaped big gains, garnering over $4 billion in IPO returns, twice that of 2023. Major VCs like SoftBank and Peak 15, Axel, Elevation and others turned years of patience into blockbuster payoffs. Against global challenges, India's market stood resilient, driven by economic growth, regulatory reforms and strong investor confidence. And the IPO wave is far from over. 2025 looks even more promising, with at least 25 IPOs lined up at last count.
And big-ticket funding also made headlines, with startups raising more than $10 billion. Family offices played a major role, pouring capital into the ecosystem. Now, 2024 also wasn't without challenges, rather, where layoffs dropped significantly from 2023, but even then, more than 9,000 people were handed pink slips. Corporate governance issues continue to plague startups like Byju's, while some others like Koo and Resha Mandi had to shut shop. Now, before we bring in our guests for the show, here's Aishwarya Anand with a recap of the investment landscape for startups in 2024.
2024 is closing on a good note for Indian startups. Capital flow showed signs of limping back to normalcy, with deal flow picking up particularly in the last few months of this year. As per data from Venture Intelligence, nearly $11 billion was raised by Indian startups till December 13, compared to $9.6 billion raised in 2023, when Indian founders suffered a 5-year low in terms of fundraising. But, interestingly, more deals were closed in 2023 than in 2024. While early-stage deals remained stagnant at around $1.6 billion, growth-stage deals crossed $5 billion this year. Bloom Venture, Elevation Capital and Peak 15 partners emerged as the top deal makers of 2024. When we talk about sectors that's raked in the most moolah from venture capitalists this year, e-commerce leads the chart, quickly followed by enterprise software, fintech and artificial intelligence, which saw over $700 million worth of capital flowing into the sector. Zepto remained the funding leader in 2024, raising more than $1 billion in 3 rounds. E-commerce major Meesho also emerged as PE and VC investors' favorite, followed by edtech unicorn Physicswala and ride-hailing platform Rapido, among others. If one story stood out, it was the remarkable rise of startup IPOs. A record-breaking 12 startups went public, raising billions and cementing India's position as a thriving hub for innovation and entrepreneurship. Years of patient investment in startups yielded massive returns, with VC funds earning over $4 billion through IPOs and public market sales, double of what they earned in 2023 and 2.5 times that of 2022. Industry giants like SoftBank, Peak 15, Axel, Elevation Capital and Prosus turned their bold investments into extraordinary success on Dalal Street. Now, looking ahead, 2025 is set to continue this momentum with an even bigger IPO pipeline. At least 25 startups, including Zetwork, Meesho, Bluestone, Urban Companies, Zepto, Grow and Pine Labs, are preparing to hit the public markets. Not just that, venture capitalists are sitting on a record amount of dry powder. $20 billion is ready to be invested in Indian startups. AI is currently the most promising theme, with investors showing strong enthusiasm for startups in this field.
Well, thank you, Aishwarya, for taking us through the top trends and the deal activity this year. Another big trend has been the rise of domestic investment. Family offices have emerged as serious players, contributing over $1 billion to startup investments. While early-stage funding remains robust, growth-stage funding, amidst global uncertainties and falling interest rates, has been marked by cautious optimism and a focus on quality over quantity. To talk to us about 2024's key milestones and what 2025 will be for the Indian startup ecosystem. Joining me now is a veteran, Dr. Apurva Ranjan Sharma, co-founder and managing director of Venture Catalyst. Dr. Apurva, welcome to Startup Street. First, tell us what were the key milestones of the year gone by and what will continue to drive momentum and deal activity in 2025.
Thank you. Thank you very much for inviting. The key milestone of 2024 is one of the big milestone is AI transformation, which is happening. The oven, which is the next level of ChatGPT, is transforming the things globally. Now the things have moved from LLM to the oven level where they are able to think and they can also, respond and listen to the queries. So basically, next level AI transformation is happening globally.
Okay.
You can also see in the space tech, the engine has come back to boost and in the Tesla has done that, which is also a big thing. Big milestone happened.
Sure.
So the impact of that is also happening in India. You can see a lot of AI transformation. Jensen was here from NVIDIA with Mr. Mukesh Ambani. He had a session where Mr. Ambani declared the way he transformed the internet in India, brought it down to 15 cents per MB. He's going to transform the AI infrastructure in India.
Okay.
So the fair chances that AI revolution is also taking the door.
All right. Dr. Apurva, 2024 also saw a resurgence of major funding rounds, with VC firms injecting over $10 billion into the ecosystem. What was expected to be a chilly winter for venture capital saw funding spring, with Indian startups seeing large ticket deals in winter 2024-2025, setting an optimistic tone. What's fueling this winter funding spring?
Two things which are fueling the winters, which has just gone, I will say. One, the 12 IPOs, which has just happened in this year. In the last 3 years, Indian stock market, the success of startup is established and the return also.
Yes.
Remember, there was Paytm IPO. The big chunk of that has gone to the global investors as an exit. From there it started. So global investors have realized that Indian stock market is responding to startups very, very well. And that is why you can see the Zomato and Swiggy story also now this year.
Yes.
So that is giving the confidence to global investors.
Okay.
That if you invest in India, the exit mechanism is already in place.
All right.
That is number one. Number two is the bottom line focus of the large companies, which was not the case 3 years back. The winter has taught us a lot.
Yes.
Almost all the large companies, they are focusing a lot on bottom line because they are targeting IPO in Indian stock market.
Okay.
That is why the strength of Indian startups is also reflected to the global investors. And that is why you see these startups becoming more attractive to the global investors. So the inflow is...
All right. All right. Thank you for explaining that to us. If one story stood out in 2024, it was the remarkable rise of startup IPOs. A record-breaking 12 startups went public, raising billions. Do you see the momentum continue in 2025? There seems to be an even bigger IPO pipeline.
100%. The corrections which has happened in the last couple of years in the business focus and bottom line, as well as the robustness of towards the business, is going to yield the benefits in the next couple of years for sure. It's going to increase. Another indication is that the large stock market investors, they have started investing a lot of capital into the startups. And I know a lot of my portfolio, which are in the range of $500 million to $1 billion, they are getting 100 crore checks, 90 crore checks from one single family offices now, which was not the case earlier, right? So they have started participating in the startup and they are confident to take them to IPO.
Okay.
Which you just said, $1 billion came from offices, right? So this is a reflection that they have a full confidence on our startups.
Absolutely.
And that is when it will be coupled with the global investment, it will be continued success stories coming in the future.
All right. On that note, it's time for me to ask one final question. Dr. Purva, tell us which sectors look the most promising to you in 2025. We are seeing key sectors like defense tech, space tech, and advanced manufacturing driving fresh investment interest. Your thoughts, and also if you could talk to us about sustainability-led growth in high-tech impact sectors.
So if you ask me from the exit point of view, the manufacturing innovations becomes very attractive to the investors because there is a clear-cut exit path available in the stock market. From the global investors' perspective, defense, space tech, the AI, and the agri-tech, these are important sectors.
Sure.
There are many new sectors which has opened, right?
Yeah.
But defense space is one of the big possibility in India.
Okay.
Because the spending of government of India in defense sector, and now they are giving opportunities to lot of startups.
Okay.
To do this. So that is also a huge possibility.
Sure.
That's why a lot of global capital is likely to come in the defense sector and the space sector in the near future.
All right. On that note, we'll have to wrap up our conversation. Dr. Purva, many thanks for joining us on Startup Street today and wish you a very happy new year.
Thank you very much.
Well, we just discussed how venture capital funding panned out this year. It remains selective with investors focusing on profitability and sustainable growth. One sector, however, continues to attract attention, and that is e-commerce, particularly quick commerce. But before we invite our guest on the show, here's a report from my colleague Shilpa Ranipeta on the meteoric rise of quick commerce in 2024 and what the next year will hold in store.
First, they said no one wants delivery in 10 minutes. Then a few players offered it anyway and spoiled the Indian consumer. As the year progressed, everyone wanted everything in under 10 minutes. Groceries, iPhones, flowers, party hats and decorations, juicers, speakers, shoes, jewelry, even bed sheets.
Bed sheets was 3 months back. It was the most searched, let's say, more searched with less selection than what consumers wanted. So that's an example. You would wonder why people want bed sheets in 10 minutes, but they want it.
The Indian consumer loved it. Blinkit, for instance, delivered nearly 93 million orders in the second quarter alone, and Instamart fulfilled nearly 70 million orders. And so 2024 became the year of the quick commerce boom. Zomato's Blinkit and Swiggy's Instamart have been growing in triple digits and are growing nearly 6 times faster than their food delivery businesses. Zepto, on its part, is the highest funded startup in India, having raised $1.35 billion in 2024 alone. Small wonder then that a slew of existing e-commerce players are jumping onto the bandwagon. Flipkart has launched Minutes, Myntra has launched M-Now, Amazon is testing Tez, and Big Basket also pivoted to quick commerce. Experts say that given a massive total addressable market, the increased competition will not be a problem provided companies can execute at scale. As 2025 dawns, quick commerce companies are trying to get food and drinks delivered to consumers within 10 minutes, and that will be the next frontier.
So 2025 could well be the year the quick commerce model will be put to test, and the company that manages to keep costs in check and turn profitable while keeping up with the ever-changing expectations of the impatient and spoiled consumer will determine who emerges a survivor. In Mumbai, Shilpa Ranipeta.
For more on the key trends of this year and what lies ahead for the e-commerce industry, I have with me Mrigank Gutgutia, who's the partner at Redsia. Mrigank, thanks very much for your time here on Startup Street. E-commerce in India, we've seen explosive growth in the sector. Quick commerce has been the buzzword for this year. Could you start by explaining why this segment has taken off the way it has and where the current GMV, average spends and the number of users stands?
Thanks for having me. I think for sure, quick commerce has had a fantabulous year. Looking at the data sets of the total size of the sector, we see that on every month, the sector is breaking all the records in terms of growth. So most of the months this year, the quick commerce sector in India, when we look at the GMV levels, it is growing at more than 80% on a YOY basis. And if you talk about the actual GMVs that we expect, I think by the end of FY25, or let's say by the whole, FY25 period, or for the period ending in March CY25, I think we will see the sector exceeding a GMV of close to $6 billion. Right, so for a sector that was just about less than 1 billion, maybe 4-5 years ago, to reach the 6 billion scale by FY25, I think it's a fantastic achievement. And I think one of the biggest factors that is driving the growth of the sector is the monthly transacting users. So just about a few months ago, the sector had about 8-9 million monthly transacting users. But because of this phenomenal growth in adoption and experience, we expect that the monthly transacting users will be more than 15 million. It's already there in these last couple of months, and the average for the whole year might also be sitting around the 15-17 million mark, right? So that's the monthly transacting users. And essentially what is happening is that user is just spending across the categories, not just grocery, but across electronics and home goods, some part of fashion, beauty, and so on. So it's really spending across the segments, and the huge convenience that quick commerce has afforded to our customers that is really driving the phenomenal growth in the sector.
Well, very briefly, Mrigank, what are the factors that are driving this kind of growth that you're outlining? $6 billion by FY25, the kind of user-based growth you're expecting. What's really driving all of this?
I think it's a combination of multiple factors that have come together in the urban India to drive this, a kind of a growth which has not been seen anywhere in the world. I think the first factor is that there is a class of Indian customers. You can debate about how big that class is, but let's say 50, maybe 70 million customers across the cities. So they are the customers who want very convenient shopping experiences, and they want access to the best-in-class products and also access to the value products. First of all, quick commerce is very effectively solving for this kind of a customer cohort needs, right? And we see that the product selection is expanding on a month-on-month basis. Practically, as a customer, you can get access to global products, fresh products, value packages, and so on, right? So the best-in-class selection delivered in 15, 20 minutes, 10 minutes of time, I think that's a huge factor at play. Secondly, I think Indian customers is probably one of the most technologically, digitally savvy. I think that factor has again played a role, the user interface. Comfort. And finally, I think the access to the pool of the delivery riders who has been able to come on board these platforms and able to fulfill the demand. I think that has played a very large role together with the other factors. This growth,
Well, Mrigank, how large is the total addressable market, and will this boom that you're talking about stabilize at a certain level?
I think it's difficult to put very exact estimates on the addressable market. I mean, for all we know that a very, very large chunk of the total retail number in at least the top 50, 100 cities can potentially move to quick commerce. So that's one point. I think to answer the second question, whether the boom will continue, yes, we believe that the journey is just about started. I think we have about 50 million or 50 to 70 million users who can come on board online in the next few years. So today we are at 15, 17 million. So there's a huge headroom for a total user base growth that can happen. And we believe we are still at a very early stage of this journey.
Well, what's interesting is that it's not just Blinkit, Swiggy or Zepto, etc. It's also the traditional brands like Fab India, Adidas, Hamleys, you talk about them. They all want in on this trend. What would that mean in terms of competition and unit economics for the younger players and outlook for, the coming year?
I think to address the first question, I think it's true that many players want to enter the space very seriously. And it's understandable because from our customer research, we see that the expectations on the delivery speed, that expectation is just changing quite a lot. Customers are demanding much faster deliveries. And we do expect that the average delivery time, not just in quick commerce, but overall e-commerce, it will come down over a period of time. So it's understandable everyone wants to go fast. I think practically speaking, while yes, the competition intensity will increase, that's true. At the same time, the incumbent players, the large players, they are finding out some new ways to increase their revenues and profitability. For example, the rise of ad monetization. The ads business on quick commerce is just booming like anything. And then there's a launch of food delivery on the quick commerce user base, right? So new avenues for monetization are coming up. So even if competition increases, we don't believe it will have a huge impact on the profitability and the unit economic structure. So there are enough pathways to improve the profitability for the larger players. So that's the second part of your question. And the third part was about the outlook for the coming year. I think the coming year will continue to see an extension of the quick commerce trends that we saw this year. The first
Got that, Mrigank.
yeah, like expansion, and then more order density, and a larger basket sizes, more category.
Well, thanks very much, Mrigank, for wrapping that up for us. It's been a pleasure speaking with you, and we wish you a happy new year.
On that note, it is time for us to head into a short break. But coming up next, we look at India's clean tech sector as the next big opportunity. Stay tuned. Welcome back. You're still with us on this special episode of Startup Street. India's clean tech startups saw a funding boost in 2024 with over 3,000 ventures tackling environmental challenges through innovative solutions that balance growth with sustainability. This trend marks a shift toward clean technology to reduce the impact of industrialization and urbanization. With increased investment and government support for renewables and sustainable infrastructure, clean tech is set to become a major power source by FY50. Joining me now to explore this opportunity are Vaibhav Anand, the founder of Bamboo, and Vivek Pandey, the co-founder of EcoZen. Gentlemen, thank you so much for taking time out and being here with us on Startup Street. You know, Vaibhav, let me start with you, right? You're a sustainable packaging solutions company, and you've managed to raise funds this year as well. If you could sort of take us through the kind of impact that you've been able to create via your solutions and the kind of demand you've seen this year.
Well, thank you so much for having me here, first of all, and it's always great to speak about sustainability everywhere. So far, we have saved more than 64,000 tons of single-use plastic going into the waste. That relates to roughly around 134,000 tons of carbon emissions that we have saved through the alternates which we have developed, which is basically replacing single-use plastics.
All right, and the kind of demand you're seeing for your products?
To be really honest, everybody wants to move out of single-use plastic, be it a small brand or a larger brand, right from the largest FMCG companies to the smallest retail stores. Everybody wants to move out of single-use plastic, so we can see a huge demand coming up. We have never been heard a no from any of the brand who doesn't want to move out of single-use plastic. So it's inevitable that the business or the entire ecosystem is moving towards sustainable alternates, and there's a huge boom coming up into the near future as well.
Absolutely. So literally the world is your oyster at this point of time. But Vivek, let me bring you into the conversation as well, right? You've had a great year, and according to reports, you're also planning to raise a whopping $75 million to sort of fuel your growth, increase your market presence. You know, before we get to that, what's the kind of investor appetite that you're seeing for solar-powered irrigation pumps? And take us through the impact that you've been able to create through 2024.
Well, we recently raised about $30 million in debt and equity in April, and there are some plans to do some fundraisers, but they're still in wraps for now. we at Ecozen, have been in the industry for quite some time now, and now we have been working with about 300,000 customers already. So far, it has been an agricultural focused opportunity across irrigation, clean tech irrigation, and clean tech powered cooling. And now we are expanding beyond that, right? So in this year itself, we have moved beyond the pumping space to more of a rural, motor-focused, sustainability space where we are decarbonizing further by enabling more motors apart from pumping, replacing diesel with our high-efficiency, motor systems for various rural applications like milling, oil extraction and whatnot. We are also looking at getting into, cooling not only what we have been focusing on so far, which are fruits, vegetables, and flowers. We're moving beyond that to freezing applications as well.
Vaibhav, coming back to you, one of the biggest challenges that the sustainability sector is seeing is sort of the issue with pricing, as the cost to convert products into sustainable items is obviously higher. So how is tech helping you mitigate these costs, and what's the biggest challenge you feel that you're facing at this point, especially for this sector?
Well, see, to be really honest, sustainability is good for everyone until it creates a dent into their pocket. However, it's a big myth that the sustainable product has to be costlier than what you're using today. At Bamboo, we have been able to solve for this cost problem, and all our products, majority of our products, are at par with the plastic pricing. So the adoption is just around the corner to happen. However, the challenges into this sector, obviously cost remains one of the very major challenge because there are not many players who have come up with these solutions into the market today. However, we see that coming into the future. Apart from that, the adoption is one thing which is a major challenge because it takes a lot of effort and time for a brand to move out of what they are doing to something which is very new. But
Vivek, if you could take us through in like 30 seconds how big this clean tech opportunity is. Solar power, sort of had a first mover advantage in the clean tech space. The government is also giving a boost to firms like yours. So if you could take us through the big opportunity for 2025 for the clean tech sector.
Right. So India itself is a huge country, right? And if you look at, just cooling as a sector, about 10% of all energy that the world produces goes into cooling. Pumping, again, is a big energy guzzler. And that's the scale. So we are talking about, on a world level, 10 to 20% of what can be done using clean tech to decarbonize, right? And that's where a lot of these innovations come into picture, and it has been a core focus of Ecozen to actively contribute in transformation by addressing these emerging needs.
If you could quickly tell us, Vaibhav, I'll start with you, the big target for 2025.
We are looking to close more than 100 crores in revenue, that's for sure, and try to replace as much single-use plastics from the packaging industry as we can. That's the target that we have. That's the
big target. Vivek, what about you?
So we have been doubling year over year, and this year we will be closing at about 1,000 crores. But next year, the key focus is going to be introduction of new innovations that align with our evolving customer needs. So we are focusing more and more towards the end consumer and the customer for furthering our mission on delivering sustainable solutions. So that's the key focus. I think the revenue will come on its own. Yeah.
All right, Vivek, Vaibhav, thank you so much for taking time out and being here with us on Startup Street, and we wish you all the best on your journeys going forward.
All right, with that, it's a wrap on this special episode of Startup Street, where we brought you all of the key themes from the year gone by. Here's wishing all of you a very happy new year.